All right, so you're thinking about investing in this Bajaj Housing Finance IPO. We're here to give you the info you need to figure out if it makes sense for you. No crystal ball here, but we'll definitely equip you with the knowledge to make a solid decision. We've got an expert with us who knows this world inside and out, so you ready to get started with this deep dive?
Absolutely. Let's break it down.
Okay, great. First things first, let's set the scene. The Indian housing finance market is, well, it's booming right now. It's projected to grow at like 13 to 15% every year until 2027. That kind of growth is pretty hard to ignore.
It really is. And it's not just like a random blip or something. This growth is fueled by some pretty powerful forces: rapid urbanization, more and more people having disposable income, and government programs that are actually pushing home ownership. These are major trends here. The Crisil report really digs into all of this.
Yeah, the report was super interesting. But here's the thing that I found interesting. Even with this incredible growth, India's mortgage penetration is still way lower than other countries. We're talking like South Africa, Malaysia. It seems a little counterintuitive.
It does, but that's exactly what makes this industry so exciting. That low penetration means there's a massive untapped market out there. And that's where Bajaj Housing Finance comes in. They've been the fastest growing housing finance company, at least in recent years. They have a 4-year AUM CAGR of 29.3%. That's them grabbing a share of this booming market.
Wow, that's impressive. Okay, so they're riding this wave of growth, but they're not alone, right? There's definitely competition.
Absolutely, yeah. You have big names like LIC Housing Finance, and banks like PNB Housing Finance are already established, but Bajaj Housing Finance is definitely making a splash.
Okay, so we've got this picture of a company in a high-growth sector, lots of competition. Let's zoom in on Bajaj Housing Finance itself. What's their deal? What do they actually do?
So they're a non-deposit taking housing finance company, registered with the National Housing Bank since 2015. Basically, they don't take deposits like regular banks. Their main focus is on lending money for housing.
Okay, so what kinds of loans are we talking about here? Just like basic home loans, or is there more to it?
Well, they do home loans, of course, but they also have loans against property, and then lease rental discounting, and even financing for developers. So, they have a pretty diverse product portfolio. They cater to different parts of the real estate market.
You've got it. So not a one-trick pony.
Yeah.
But their bread and butter is still individual retail housing loans, right?
Exactly. Those individual homeowners are their main focus, although the commercial and developer loans definitely add another layer to their business.
Got it. So they're playing in this booming market. They have a pretty diverse set of loan products. What makes them stand out? Why are they growing so fast?
Well, their approach is quite strategic. They have this hybrid model where they engage directly with customers, but they also leverage a network of intermediaries.
Intermediaries. Can you explain that a little?
Sure. Think channel partners, aggregators, agents. They all play a role in bringing in potential customers and helping to move that loan process along.
Ah, so they're not just waiting for people to walk into their branches.
Right. And speaking of branches, they actually have a network of 215 branches across 20 states and 3 union territories. They're really covering a lot of ground.
Wow, that's pretty impressive reach. But with all this lending going on, how do they make sure they're not just handing out risky loans left and right?
That's where their risk management comes in. They've got these centralized hubs for underwriting and loan processing, which ensures consistency and quality control. And they were also pretty early adopters of technology. They use data analytics and other tech tools to really streamline things and assess creditworthiness.
So they're trying to be smart about it. Okay, let's get to the heart of the matter. Their financials. Do the numbers actually back up this impressive growth story?
Well, their financials look very solid. Their total income for the 3 months ending June 30, 2024 was a whopping $76,177.1 million. That's a big jump from $56,654.4 million in the same period in 2023.
Okay, so revenue is definitely up. But are they actually profitable?
Very much so. Their return on average equity, or ROAE, in fiscal year 2024 was 14.3%.
14.3%. Is that good? Put that into context for me.
Yeah, it's significantly higher than industry peers. PNB Housing Finance, for example, was at 11.1%. So Bajaj Housing Finance is doing very well on the profitability front.
All right, so they're growing, they're profitable. What really jumps out at you when you look at their financials?
The consistency, I think.
Sure.
Over the past few years, they've shown a clear upward trend, both in revenue and profitability. It tells me their business model is working, and they're executing their growth strategy quite effectively. They're not just a flash in the pan.
That's a really good sign. So we've got the industry, the business model, the financials. Now let's talk about the people behind it all, the promoters and management. Who's driving this success story?
Well, the promoter with a 100% stake in Bajaj Housing Finance is Bajaj Finance Ltd. And they're kind of a major player in the Indian financial sector.
So some serious backing there. What about the management team at Bajaj Housing Finance itself? Are they experienced?
Absolutely. Atul Jain, the managing director, and Rajiv Jain, the vice chairman and non-executive director, they both have a ton of experience in this industry. They've got a really solid track record.
So the leadership seems strong. Now let's get into the IPO itself. Why are they going public? What are they hoping to achieve with this?
Well, their main objective is to strengthen their capital base for future growth, specifically for lending more money. They're raising capital through a fresh issue, which will directly benefit the company.
And I see they're also doing an offer for sale, or OFS.
Right, that's where existing shareholders sell some of their stake. But it's important to note that the company won't directly benefit from the OFS proceeds.
So for anyone listening, it's crucial to understand how those fresh issue proceeds will be used. It'll give you a better sense of the IPO's impact on their growth. But we also have to talk about the risks, right? No investment is a sure thing.
Absolutely. And one of the biggest risks for Bajaj Housing Finance is their reliance on the real estate market. Their DRHP even states this clearly. If the market takes a hit, their financial health could be impacted.
Right. That makes sense. And we can't forget about the competitive landscape. They need to stay ahead of the curve, constantly innovating to keep their edge.
Exactly. And another thing to consider is their reliance on that external distribution network. While it's been working for them so far, it's important to monitor a potential vulnerability.
Vulnerabilities like what?
Well, think about it this way. If there are issues with the performance or reliability of their intermediaries, it could directly impact their ability to attract new customers and even originate loans. They really need to manage these relationships carefully.
So it's a balancing act. Now let's talk about valuation. Is the IPO price a good deal? Are we getting our money's worth here?
Valuation is always a little tricky. We use metrics like the price-to-earnings ratio, or PE ratio, and the price-to-book ratio, or PD ratio.
Okay, I've heard those terms thrown around. Can you refresh my memory on what they tell us?
Sure. The PE ratio basically tells you how much investors are willing to pay for each rupee of the company's earnings. A higher PE usually means higher growth expectations. The PD ratio compares the company's market value to its book value, so it gives you an idea of how much investors are paying for each rupee of the company's assets.
Got it. So how does Bajaj Housing Finance stack up against its competitors when it comes to these ratios?
That's where you need to do your homework. Look at their PE and PB ratios, compare them to their peers, and then see if that IPO price seems justified based on their performance and growth prospects. Don't just take our word for it.
Good advice. Do your own due diligence. Now, what about this shareholding pattern? Who owns what, and how will that change after the IPO?
So before the IPO, the promoter, Bajaj Finance Ltd, owns 100%. But after the IPO, this ownership will be shared with public shareholders. It's important to look at this post-IPO distribution.
Okay, but what does that actually mean for me as a potential investor?
Well, it's about understanding potential future movements in the share price. Are there big institutional investors coming on board? What about lock-in periods?
A lock-in period?
Yeah, those are periods where certain shareholders, including the promoter, can't sell their shares for a set time after the IPO.
So it prevents a sudden flood of shares hitting the market and tanking the price.
Exactly. Knowing about lock-in periods can give you a sense of future price volatility. Now, let's take a closer look at their financial statements. Don't worry, we'll keep it clear and concise.
Financial statements, balance sheets, cash flows. That's where my eyes usually glaze over a bit. Help me make sense of it all.
No problem. We'll focus on the key figures and what they reveal about their financial health. First, let's look at the profit and loss statement, which summarizes their revenues, expenses, and profits over a specific period.
Profit and loss. That tells you a lot about how well a company is actually doing right.
Absolutely. It's like a snapshot of their overall financial performance. Now, let's move on to the balance sheet. This statement shows the company's assets, liabilities, and equity at a particular point in time.
Assets, liabilities, equity. Can you break those down for me?
Sure. Think of assets as what they own: cash, investments, loans they've given out. Liabilities are what they owe to others, debts, obligations, and equity is what's left for the shareholders after you subtract liabilities from assets.
Okay, so the balance sheet shows us what they own, what they owe, and what's left for the shareholders.
Exactly. It's crucial for understanding their financial position. Next up is the cash flow statement, which tracks the movement of cash both in and out of the company.
Cash flow, the lifeblood of any business, right?
You got it. It shows how they generate and use cash. We can see where the money comes from, where it goes, and if they have enough cash to operate effectively.
So the cash flow statement tells us about their financial health in terms of liquidity, like can they pay their bills?
Right. Are they generating enough cash from their operations? Are they investing in future growth? The cash flow statement helps us answer these questions. Now, beyond these core financial statements, there are key financial ratios that provide valuable insights.
Ratios, okay. More numbers to crunch. Can you give me some examples of ratios that are important when evaluating a company's financials?
Sure. Some key ratios to look at include liquidity ratios, which measure their ability to meet short-term obligations, solvency ratios, which assess their long-term financial stability, and profitability ratios, which we already talked about with the ROAE.
So these ratios give us a more nuanced view of their financial health, beyond just the raw numbers in the statements.
Exactly. They help us analyze trends, compare the company to its competitors, and assess their overall financial strength. It's like using a magnifying glass to get a closer look.
Now, going back to Bajaj Housing Finance, what jumps out at you when we analyze their financials? What's the story they're telling?
Well, what I see is consistent, robust financial performance, strong revenue growth, healthy profitability, and a definite focus on managing risk. Their financial statements paint a picture of a company that's well managed and positioned for continued success.
So a pretty positive picture so far. But let's step back and look at the bigger picture for a second. What are some broader trends that could affect Bajaj Housing Finance's future?
One crucial factor is regulation. The Indian financial sector is constantly changing, and new regulations or policies could significantly impact their operations.
Can you give me an example?
Sure, the Reserve Bank of India, or RBI, they recently introduced guidelines for digital lending, which is a growing segment for Bajaj Housing Finance. They need to be able to adapt and stay ahead of these changes.
So regulatory changes are something to watch. What else?
The overall economic environment, India's economic growth, interest rate fluctuations, inflation levels, all of these play a role in the demand for housing loans, and therefore Bajaj Housing Finance's business.
So macroeconomic trends definitely matter.
Yep.
Anything else?
Technological disruption. The financial technology space, or fintech as they call it, is evolving rapidly. New players with innovative solutions are emerging all the time. Bajaj Housing Finance needs to embrace technology if they want to stay competitive.
Right. They can't afford to get left behind. They need to stay ahead of the curve in technology.
Absolutely. The ability to use technology effectively is going to be key in the financial services industry going forward.
Okay, well, that's a wrap for part one of our deep dive into the Bajaj Housing Finance IPO. We've explored the industry, the company, and their financials.
And we've highlighted the importance of considering both the opportunities and the risks associated with this IPO.
Exactly. We want to give you the knowledge to make an informed decision, not just get caught up in all the hype.
Remember, investing requires careful consideration, research, and a balanced perspective.
Now stay tuned for part two, where we'll dig even deeper into Bajaj Housing Finance's operations. We'll be looking at their risk management, growth strategies, and competitive advantages.
We'll also take a closer look at their management team, their experience, their expertise, and their track record.
And of course, we'll continue to address your questions and concerns, giving you the information you need to make a well-informed investment decision.
Looking forward to continuing this deep dive with you in part two. Welcome back to our deep dive into the Bajaj Housing Finance IPO. Ready to go even deeper?
Absolutely. Last time we set the stage, talked about the housing finance market in India. We dug into Bajaj Housing Finance's business model, their financials, the leadership. We even started cracking open those financial statements.
Right, but there's still so much more to explore. Today, let's focus on how Bajaj Housing Finance actually operates, day to day.
Okay, let's get into the nuts and bolts. What are some of their key processes?
One of their biggest strengths is their risk management framework. They've centralized their underwriting and loan processing, which helps ensure consistency and high standards across all their branches.
Centralized. Can you tell me a bit more about that?
Sure. They have these hubs, 6 for retail underwriting and 7 for loan processing. And they're strategically located to serve different regions. This centralization means they can use specialized expertise. streamline operations, and keep a tight rein on their lending practices.
So it's not just about having branches all over the country. There's a real system in place.
Definitely. This model helps them standardize their evaluation process, minimizing variations. It ensures that every loan application is thoroughly assessed against the same criteria.
That makes sense. But can you walk me through their process for assessing those applications? What's their underwriting actually like?
They take a multifaceted approach, looking at both quantitative and qualitative factors. So they consider the applicant's income, credit history, employment stability, and other financial indicators. But they don't just stop at crunching numbers.
Okay, so what else do they look at?
They do thorough background checks, verify information, and they even visit the property itself to assess its value and condition. They want to be absolutely sure they're making smart lending decisions and minimizing their risk.
So it's a really comprehensive valuation. They're not just throwing money around.
Not at all. And their disciplined approach is reflected in their strong asset quality. Their non-performing assets, or NPAs, are quite low compared to their peers.
NPAs, those are the loans that go bad, right? The ones that lenders really want to avoid.
Exactly. High NPAs can be a sign of trouble. It might suggest loose lending practices or poor risk assessment. But Bajaj Housing Finance has a pretty good track record here.
Okay, so risk management is definitely a priority. But what about growth? How are they planning to expand and tap into that massive market potential we talked about?
They've got some ambitious plans. One key strategy is expanding their geographic reach, especially in underserved markets where homeownership is still relatively low.
So going beyond the big cities
Yeah,
and reaching those untapped pockets of potential borrowers.
right. They see a huge opportunity in these markets, where the demand for housing finance is likely to explode in the coming years.
And how are they going to reach these new customers? More branches?
That's part of it. But they're also investing heavily in technology to boost their digital capabilities. They're developing user-friendly online platforms, mobile apps, and other tech solutions to make the loan process easier and more convenient for customers.
So embracing the digital revolution like everyone else these days?
It's essential. Customers these days expect a seamless digital experience, and Bajaj Housing Finance is making those investments to meet those expectations.
Okay, so geographic expansion and digital transformation. Two parts of their growth strategy. Anything else?
They're also focusing on product innovation, creating new financial solutions that are tailored to specific customer segments. For example, they're exploring affordable housing finance options for low-income groups, who are often excluded from traditional lending.
So they're not just sticking with the same old products. They're adapting to meet evolving needs.
Exactly. This focus on innovation and putting the customer first is critical for staying ahead of the competition. Now, even with these great plans, there are some potential challenges and risks to consider.
Right, those risks. Let's dig a little deeper into what could potentially throw them off course.
Sure. As we mentioned before, their reliance on the real estate market is a major risk. If the sector takes a significant downturn, it could really hurt their loan portfolio and financial performance.
That's a risk that any housing finance company faces. What else should investors be aware of?
Competition. The Indian housing finance market is pretty crowded, with established players and new entrants all vying for market share. Bajaj Housing Finance needs to constantly innovate and set themselves apart.
So staying nimble and responding to that competitive pressure is crucial. What about their reliance on that external distribution network? We touched on that before.
Yeah, it's definitely a potential vulnerability. They need to make sure they ensure the quality and reliability of their intermediaries and manage those relationships very carefully. Any disruption in their network could impact their customer acquisition and loan origination.
So those intermediaries are kind of a double-edged sword. They offer reach and scale, but they also introduce dependency and risk.
Precisely. And we can't forget about the constantly evolving regulatory landscape. New guidelines and regulations from the RBI and other bodies could impact their operations and profitability.
So adaptability and compliance with those shifting regulations is key.
Absolutely. Staying compliant is crucial for any financial institution. And one more thing to keep in mind is the overall economic environment. India's economic growth, interest rates, inflation, all of these things can affect the demand for housing loans.
So investors need to keep an eye on those broader economic trends.
Exactly. A healthy economy usually means a healthy housing market, and vice versa.
Okay, so we've got the opportunities, the risks, and the challenges. Let's go back to the management team for a second. We talked about their experience, but let's dive a little deeper.
Of course, the people at the helm are crucial to any company's success. The managing director, Atul Jain, has over 2 decades of experience in financial services.
2 decades, that's impressive. What's his background?
While he's held various leadership positions at Bajaj Finance Ltd, before leading Bajaj Housing Finance, he's got a deep understanding of the financial markets, a proven track record in risk management, and a strong focus on the customer.
That sounds like the right person for the job. What about other key members of the team?
So Rajiv Jain, the vice chairman and non-executive director, he also brings a wealth of experience. He's been with the Bajaj Group for over 30 years, holding key positions in various group companies. His insights and strategic vision are invaluable.
So they've got solid leadership with deep industry knowledge and a history of success. That's pretty reassuring for potential investors.
It is. A strong management team can make a huge difference in navigating challenges, seizing opportunities, and driving growth. Now, let's switch gears for a second and talk about corporate governance. How does Bajaj Housing Finance ensure ethical and responsible business practices?
Corporate governance, that's about transparency, accountability.
Yeah.
Doing things the right way, right?
Exactly. It's about having the policies and structures in place to ensure the company operates in the best interests of all stakeholders: shareholders, customers, employees, the community.
So it's not just about profits. It's about doing business ethically and responsibly.
Right. And Bajaj Housing Finance has shown a commitment to corporate governance. They have a well-defined board structure with independent directors who provide oversight and ensure accountability.
Independent directors, those are the folks who aren't involved in the day-to-day operations, right?
Exactly. They bring an objective perspective and help make sure that decisions are made in everyone's best interests.
Okay, so a solid board structure.
Right.
What other corporate governance practices do they follow?
They have a comprehensive code of conduct that outlines ethical behavior and responsibilities for all employees. They also have robust risk management and compliance frameworks in place to mitigate potential risks and ensure they're following all the regulations.
It sounds like they're taking corporate governance seriously. That's a good sign for potential investors.
It is. Companies with strong corporate governance practices are more likely to be well managed, transparent, and accountable. This can lead to greater trust from investors and a more sustainable business model. Now let's touch on another important aspect: environmental, social, and governance, or ESG considerations.
ESG, everyone's talking about it these days. What does it mean for Bajaj Housing Finance?
It's about understanding their impact on the environment and society, and how they govern themselves. Investors are increasingly factoring ESG into their decisions.
So it's not just about financial returns anymore. It's about investing in companies that are doing good.
Right, and Bajaj Housing Finance has taken steps to integrate ESG principles into their operations. They have initiatives to promote energy efficiency, reduce their carbon footprint, and support affordable housing projects.
So they're not just building homes, they're trying to do it sustainably and responsibly.
Exactly. And they also have programs to promote financial inclusion, empower women, and support community development.
It sounds like they're taking ESG pretty seriously. What does their track record show? Have they actually made any progress?
Well, their sustainability reports and disclosures highlight their efforts and achievements in various ESG areas. They've definitely made progress in reducing their environmental impact, promoting diversity and inclusion, and supporting social causes.
So they're walking the walk, not just talking the talk.
That's what their track record suggests. Now let's shift gears one last time and talk about competitive advantages. What sets Bajaj Housing Finance apart from its rivals?
Competitive advantages, the things that give them an edge, right? Their secret sauce.
Exactly. And Bajaj Housing Finance has several. One is their strong parentage and brand reputation, being a subsidiary of Bajaj Finance Ltd, which is a well-established and trusted financial institution. Gives them instant credibility and access to a huge customer base.
So they benefit from their parent company's success.
In a way, yes. But they've also built their own strong brand reputation through their customer focus, their innovative products, and their robust risk management.
Okay, so strong parentage and brand reputation. What else?
Their extensive distribution network is another advantage. As we discussed, they have a wide reach across India, with numerous branches and a strong network of intermediaries. This allows them to tap into diverse markets and reach a wider range of customers.
Reach and scale. Definitely important in a market as large and diverse as India.
Absolutely. And they've also used technology really effectively to enhance their distribution and reach customers through digital channels.
So combining that traditional brick-and-mortar presence with a tech-savvy approach.
Exactly. It's a hybrid approach that lets them cater to different customer segments and preferences.
Okay, so strong parentage, brand reputation, extensive distribution, and a tech focus. Anything else?
Their robust risk management framework, as we discussed, is crucial for maintaining asset quality and financial stability. And they've got a strong track record of financial performance, consistently delivering strong revenue growth and healthy profitability.
So a combination of financial strength, operational efficiency, and a customer-centric approach.
Precisely. These competitive advantages have made Bajaj Housing Finance a real leader in the Indian housing finance market.
We've covered a lot of ground today, exploring every aspect of Bajaj Housing Finance, their operations, their growth strategies, risk management, ESG initiatives, financials, competitive advantages, and even their management team.
It's a lot of information, but hopefully you're starting to get a clearer picture of this company and its potential.
And remember, investing is a personal decision. There's no right or wrong answer. It's about weighing the opportunities and the risks, doing your research, and making a choice that aligns with your own financial goals and risk tolerance.
We've given you the roadmap. Now it's up to you to navigate the terrain and reach your financial destination.
Stay tuned for part 3, where we'll wrap things up and give you some key takeaways to help you make that informed decision.
We'll also look ahead to the potential challenges and opportunities that Bajaj Housing Finance might face in the future.
And we'll leave you with some final thoughts to ponder as you navigate this exciting world of investing. All right, welcome back to the deep dive. We've spent the last 2 parts really getting to know Bajaj Housing Finance, and now it's time to wrap things up.
Yeah, we've covered a lot of ground. That booming housing finance market in India, Bajaj Housing Finance's business model, their really impressive financials, those all-important risk factors, their leadership, even their commitment to ESG. It's been quite a journey.
It really has. Yeah. But now let's try to distill it all down. What are the key takeaways here? The things you absolutely need to remember about Bajaj Housing Finance.
Okay, so first and foremost, they're operating in an industry with huge growth potential. The Indian housing finance market is, as we've said, on fire. It's driven by some powerful forces like urbanization, rising incomes, and you can't forget the government's support for homeownership.
Yeah, that's definitely a major plus. But of course, where there's growth, there's competition. They're up against some pretty established players like LIC Housing Finance, and of course, PNB Housing Finance.
True, but even with all that competition, Bajaj Housing Finance has carved out a significant position for themselves. They've been the fastest growing housing finance company, at least in recent years, with some pretty impressive growth in their assets under management.
And they've achieved this growth while maintaining really strong financials. Their revenue, their profitability, and their asset quality have all been very impressive.
Right. Plus, they've got a robust risk management framework in place with a focus on that centralized underwriting and loan processing that we talked about. And they're really embracing technology, which is smart. It helps them streamline operations and ultimately improve the customer experience.
But we also need to be realistic about the risks here. Their reliance on the real estate market is a major one. Any kind of downturn in that sector could impact their performance.
Absolutely. And don't forget about the competition. They need to keep innovating and differentiating themselves to stay ahead of the curve.
Yeah, they do. And they also rely on that external distribution network, which, as we discussed, can be both a strength and a vulnerability.
Yeah.
And then there's that ever-changing regulatory landscape. They need to stay adaptable and compliant.
Right. And then there are those broader economic factors we talked about. India's economic growth, interest rates, inflation, all of that plays a role.
So we've got the opportunities, the risks, the strengths, and the challenges. The million-dollar question is this IPO a good investment? What's the verdict?
Honestly, there's no simple answer. The decision ultimately depends on your own financial goals, your risk tolerance, and your investment strategy.
We've tried to give you the information, the insights, the tools to analyze this opportunity.
Now it's time to do your own research, dig into those details, and decide if this investment makes sense for you, for your portfolio.
Remember, investing is a journey, not a sprint. Take your time, gather the information, and make a decision that you feel confident about.
We've provided the roadmap. Now it's up to you to navigate the terrain and hopefully reach your financial destination.
And as always, if you have any questions along the way, don't hesitate to reach out. We're here to help.
Always happy to share our insights and try to help you navigate the world of finance.
That brings us to the end of our deep dive into the Bajaj Housing Finance IPO. We hope you found this exploration valuable and insightful.
Good luck with your investment journey.
Thanks for joining us on the Deep Dive on the Deep Dive.